When the housing market crashed in 2008, the average American homeowner lost over $30,000 in equity. Neighborhoods in Phoenix, Las Vegas, Miami, they looked like ghost towns. Foreclosure signs on every other block. You know what Lubbock looked like in 2008? Basically the same as it did in '06. And I'm going to show you exactly why that happened, what was actually going on underneath the surface, and what it means for anyone buying or selling a home in Lubbock right now. To understand why Lubbock didn't crash, you have to understand what actually caused 2008 in the first place, because most people think they know, but they don't have the full picture. The crash wasn't just the economy got bad. The crash happened because of a very specific set of conditions. Banks were handing out mortgages to people who had no business getting them. Zero down, no income verification, adjustable rates that looked affordable for the first 2 years, and then absolutely destroyed people when they reset. And then Wall Street was packaging all those bad loans together and selling them like they were safe investments. It was a house of cards, and when it fell, the national median home price dropped nearly 10% in 2008 alone. The fourth quarter of that year saw a 12% plus decline compared to the same period in '07. Places like Phoenix, Tampa, Las Vegas, they got obliterated. We're talking 40–50% peak to trough price drops in some markets. Now, here's the thing. That entire machine ran on speculation. It needed markets where investors were piling in, driving prices up artificially, building way more homes than the actual population needed. It needed markets that were overbuilt, over-leveraged, and priced completely disconnected from what local income should support. Lubbock had zero of that. Let me give you 3 specific reasons why Lubbock set out this crash. The first one is Texas lending law. This is the one most people don't know about. Texas first allowed home equity lending in 1997 and immediately restricted total mortgage debt from exceeding 80% of the home's fair market value. In the sales that got crushed, there were no restrictions like that. People were pulling out every dollar of equity they had and then some. When values dropped, they were immediately underwater. Texas said, no, not here, can't do that. A report from the Federal Reserve Bank of Dallas actually credited this as one of the primary reasons the Texas housing market stayed afloat during the financial crisis. It wasn't luck, it was a law. The second reason is that Lubbock never had a speculative bubble to burst. Leading up to 2008, Texas home prices were barely priced above fundamental values at all. Investors weren't flocking here the way they were to Miami and Phoenix. Nobody was buying up Lubbock homes to flip them for a 40% profit in 2 years. The market was priced based on what people who actually live here could actually afford. That matters enormously. The third reason is the local economy itself. Lubbock's employment base is anchored by Texas Tech University, UMC, and Covenant Health, major institutional employers that don't evaporate in a recession. Health services, education, and retail have been the core of this economy for decades, and cotton. When the financial sector is melting down in New York, Texas Tech still needs professors, the hospital still needs nurses, the cotton fields still need to be farmed. The South Plains region produces more than 1/3 of the annual US cotton crop. That's not going anywhere because a bank in New York made bad decisions. Now, let me show you what this actually looked like in the data, because this is where it gets really interesting. I pulled the FHFA House Price Index for the Lubbock MSA straight from the Federal Reserve database. The FHFA tracks home values going back to '75 using actual sales prices and appraisal data on every conforming mortgage in the country. It's about as clean as housing data gets. From '06 through 2010, the heart of the crisis, Lubbock's home price index went from roughly 166 to 171. So it went up. While the rest of the country was in free fall, Lubbock home values quietly ticked upward. And today that same index sits near 290. Compare that to the national index, which fell over 20% peak to trough during those same years. Markets like Phoenix dropped nearly 50%. Texas home prices had less distance to fall when the bubble burst, and the state recovered before most of the nation did. And Lubbock, as a secondary market without the speculative froth even Texas's biggest cities had, barely felt a thing. Here's why this matters to you right now. We're in a weird moment in real estate. Rates are high, affordability is tight nationally, and every week you can find a headline telling you some version of housing crash coming, and maybe in some overheated markets that have run up 60 to 70% in 3 years, there's a real conversation to be had there. But Lubbock isn't those markets. It never has been. This isn't a market built on investors and speculators bidding each other up. It's a market built on a university that's been here since 1925, two major hospital systems, 250,000 people who live and work and raise families here. The demand's real, the jobs are real, the prices are grounded in what people in this city actually earn. That's the story 2008 already told us. It told us with the real numbers. So what do you do with this information? If you're buying, this is the kind of market you want to be buying in. Not because prices only go up, nothing works like that, but because the floor here is solid. You're not buying into a bubble, you're buying into a real local economy that has proven it can hold its own when things get the ugliest nationally. If you're on the fence and you keep waiting for a Lubbock crash that looks like '08 to buy, you might be waiting a very, very long time, because we didn't crash in '08. And the reasons we didn't crash then are still true today. Hey guys, I'm Justin Lowry with the Lowry Group, lifelong Lubbock resident. I've been watching this market my whole life, and I give you straight talk on it because buying a home is one of the biggest financial decisions you're ever going to make. You deserve real information, not just the national headlines or other realtor fluff. If this was helpful, I would seriously be honored if you'd subscribe to my channel. This is one of the main ways I can actually get valuable information to homeowners and future homeowners. There are tons of channels here that I'm not seeing true value being presented, and I want to make sure everyone seeing this feels like they came away more educated than they were before. I feel like that's my true purpose, guys. Also linked in the description is my website, thelowrygroup.com, and I built a couple of incredible AI tools that are totally free for you to use. One is a mortgage affordability tool that actually takes into account most of the information that a real lender would. And if you are looking for the best lenders in town, I have the right one for you. I guarantee it. Also, you will find an investment score calculator. This is really cool. You can basically plug in just a little bit of information on a property address and come away knowing if it's a good investment to rent or even to flip. New Lubbock market content coming every week, y'all. Thanks for sticking around to the end. Have a blessed one.